Hey everyone, welcome back to Corporate Decoder. Today we're going to dive into a SEC filing of a company that's trying to raise a lot of money. And trust me, the way they're doing it and what they plan to do with it is something you won't want to miss to be ever. Wondered how big companies finance their next moves, or what it really means when they talk about general corporate purposes. Well, in this report we will show you some hidden cards they are playing. Except have wondered how big companies finance their next moves, or what it really means when they talk about general corporate purposes. Well, in this report we will show you some hidden cards they are playing. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can talk about more corporate filings with others. IQVIA Holdings, a big name in the world of data science and healthcare, just dropped an 8K form. Now, an 8K is basically a company's way of saying, hey, something important happened and we need to tell everyone right away. In this case, it involves a lot of money. So what's the big news? IQVIA is planning to get its hands on $2 billion, that is 2,000,000. The company is doing this through its subsidiary IQVIA Inc. by offering senior notes, which are basically a type of bond that are due in 2032. Think of it like taking out a loan that they'll have to pay back in about 7 years. Now, what's IQVIA planning to do with all this cash? They want to use it to pay off some existing debts, specifically what they owe on their revolving credit facility. This is like using a new credit card to pay off an old one. They'll also use some of the money to cover the fees and expenses that come with making this offering. Anything left over will go towards what they call general corporate purposes, which could mean anything from investing in new projects to buying back stock. Here's where it gets interesting. These senior notes, the bonds they're selling, will have an interest rate of 6.25. Means IQVIA will have to pay that percentage on the $2 billion every year until 2032. That's a significant amount of interest. It's like when you take out a loan and have to pay interest to the bank. The deal isn't done yet. It's expected to happen around June 4, but there are some things that need to happen first. These are called customary closing conditions, and they're basically the fine print that needs to be sorted out before everyone shakes hands and the money changes hands. IQVIA also released a press release about the bond offering, which is like a public announcement to let everyone know what's going on. In fact, there were 2 press releases. The second press release announces the pricing of the notes offering, meaning they've decided on the interest rate and other details. It's like putting a price tag on something they're selling to investors. So what's the story here? IQVIA is essentially refinancing its debt. They're taking out a new big loan to pay off an older one. This could be because the interest rates are more favorable now, or because they want to free up their revolving credit facility for other uses. The fact that they have excess proceeds to use for general corporate purposes also suggests they are looking to invest in the business. Now, for my take on all of this, on the surface, it seems like a pretty standard financial move. Companies refinance debt all the time. But let's dig a little deeper. IQVIA operates in a complex and competitive market. They're a major player in healthcare data and analytics, but they face competition from other big companies and smaller niche players. Refinancing their debt could give them more financial flexibility to invest in new technologies, make acquisitions, or expand their services. The risk, of course, is that they're taking on a significant amount of debt. If the economy takes a downturn, or if IQVIA's business doesn't perform as well as expected, they could have trouble making those interest payments. A 6.25% interest rate isn't exactly cheap. Also, the term general corporate purposes is quite vague. What exactly does IQVIA have in mind? Are they planning to invest in research and development, expand into new markets, or simply pad their bottom line? The lack of transparency here is a bit concerning. Overall, I'd say IQVIA is a company with a solid position in a growing market, but this debt offering adds a layer of complexity to their financial picture. It could be a smart move that allows them to grow and innovate, or it could be a burden that weighs them down. Only time will tell. Alright, that's our breakdown of IQVIA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.